Hello and welcome to the Stock Dork, your source for the best stock market trends and investment opportunities across the internet. If you've been looking for income opportunities on the market, then you come to the right place, because we put together a list of the best dividend-paying REITs available to buy now. And the good news is that we're here to share them with you. Medical Properties Trust, ticker MPW, leads their list as the best REIT in the healthcare sector. The investment trust had its initial public offering in 2005, just 2 years after it was established, and now it operates a whopping 434 medical properties in over 10 countries and 4 continents. That's a lot of rent collected. By holding this gem, investors are able to share the wealth with MPW as the REIT pays a jaw-dropping 10.41% dividend yield. That's nearly $1,000 per month on a $100,000 investment. That doesn't make retirement seem so far off. But there is more to this REIT than just hospital buildings and high dividends. 80% of the trust portfolio is invested in long-term or inpatient hospital facilities, helping the REIT's income maintain stability and keep those dividend payments rolling out on time. And did we mention that Medical Properties Trust also happens to be the world's second largest non-government owner of hospitals? Demographic trends in America could also benefit MPW investors, as they could help fuel momentum for the sector in the coming decade. America's baby boomer population is quickly approaching retirement age. By 2030, every baby boomer will be over the age of 65. The aging demographic makes up nearly 1/5 of the American population, and it is possible that they will be spending more on healthcare, which could boost MPW's balance sheet. Potential for growth and a fat dividend payout all sound like worthwhile reasons for us to want to add this one to our watch list. If you like what you're hearing, you might want to sign up to our free newsletter for the latest daily stock market updates and the latest trending stocks right in your inbox before the market opens every trading day. Check out the link in the description or pinned comment to sign up. Up next is Realty Income Corp, ticker O. Now, we believe that no dividend REIT list is truly complete without this one. Established during the Summer of Love, this REIT has been paying its shareholders for over 50 years. The trust owns bragging rights to nearly 630 consecutive declared monthly dividends, which have earned it the prestigious title Monthly Dividend Company. What's even more remarkable is that it has 101 consecutive quarterly dividend yield increases, earning it a place in the prestigious S&P 500 Dividend Aristocrats Index, an index that hosts the best dividend blue chips the markets have to offer. If that wasn't juicy enough, the trust owns a diverse portfolio of commercial real estate properties in all 50 states, with additional locations in Puerto Rico, the United Kingdom, and Spain. A few more promising measures include long-term tenants like Sainsbury, 7-Eleven, Lowe's, and CVS Pharmacy. Many of these locations could provide steady streams of dividend income now and into the future. So we could safely say, with a stable 4.70% dividend yield, this could be a safe bet. It's hard to top Realty Income, but we've done the heavy lifting for you and found other competitive players, like VICI Properties, ticker VICI. VICI is all about having fun. This REIT is one of the country's largest owners of gaming, entertainment, and hospitality destinations. Although it has gaming locations all across the US, it has the heaviest concentration in the Las Vegas area. And we all know what Las Vegas is known for. Cha-ching! Nearly half of VICI's 45 venues are located on the famous Vegas Strip. As a spin-off of Caesars Entertainment, VICI Properties has a large assortment of Caesar-branded buildings in its portfolio. Since its split from Caesars, VICI Properties have added various other big players like MGM Resorts, Hard Rock Cafe, Great Wolf Lodge, and The Venetian. As we kick off a new year, VICI Properties draws attention to finding new leading brands to partner with. And to top it off again, this REIT also has 34 acres of undeveloped land near the Las Vegas Strip to capitalize on. But as it appears, not everything that happens in Vegas stays in Vegas. With a high roller dividend yield of 4.81%, VICI brings the jackpot back home and shares it with investors. Ain't that sweet? Just make sure you don't gamble it away. ARMOUR Residential REIT Inc., ticker ARR, is up next. Headquartered in Vero Beach, Florida, primarily investing in mortgage-backed securities, each is either issued or guaranteed by a US-sponsored entity. These entities include Fannie Mae, Freddie Mac, or government agencies such as Ginnie Mae. The majority of this REIT's loans are fixed rates, and the remaining are hybrid or adjustable rate loans. Although its current share price point makes ARMOUR Residential REIT an appealing entry point into residential mortgages, cash flow has been up and down due to economic factors. ARMOUR has yet to return to pre-pandemic trading levels as third quarter results came back at a loss of around $144 million, further complicating the company's current standing. But don't fret, because investors believe ARR could be on the path to recovery, and you don't want to miss out on its success. Besides, the dividend yield could be somewhat attractive. How about, wait for it, 21.31%. Yeah, I know. Wowzers. Next, we have a not-so-traditional real estate investment trust, American Tower, ticker AMT. If you're looking for an unusual way to invest in real estate, AMT might be the stock for you. Instead of investing in buildings, this REIT invests in wireless communication infrastructure around the world, starting as a subsidiary of American Radio back in 1995. AMT has stayed in tune with the times, primarily dealing with cell phone towers across 6 continents and 25 countries. This REIT leads the way in innovation to keep towers operating at maximum potential, owning 223,000 global sites to relay information. And it has already invested heavily in 5G solutions to meet this new technology's demand worldwide. This company does not hesitate to make strategic purchases to expand its global footprint. Acquisitions in 2021 and 2022 added new data facilities and over 31,000 communication sites to an already impressive number of locations. Despite a quiet end to 2022, analysts believe AMT could remain a solid buy into 2023. Shareholders also get to partake in the 2.95% dividend yield. We're nearing the end of our list, but stay tuned because there are still 2 more potential winners to go. PROLOGIS, ticker PLD, is next and is all about delivering logistics solutions through its real estate network, having the most extensive collection of logistical real estate locations worldwide. With 5,800 customers, PROLOGIS provides solutions for companies looking to transport and store goods from place to place through its facilities. Some of PLD's customers include UPS, DHL, and e-commerce giants Walmart and Amazon. Although founded in 1983, it was a 2011 merger that kicked the REIT into high gear. And, like the others on this list, PROLOGIS has no desire to rest on its current success. Its development and acquisitions department actively seeks out new locations and partners to invest in. Analysts expect PLD to continue outperforming expectations, and in the meantime, it has a 2.80% dividend yield. Now, whether we've saved the best for last is up for you to decide. STAG Industrial, ticker STAG, opened its doors in 2010 and still runs operations out of its Boston headquarters. It focuses on managing industrial properties throughout the US, and its facilities often comprise of warehouse locations for temporary and long-term storage of goods. Many of its buildings, however, are also used as manufacturing centers for products. A wide array of opportunities, yes. It currently has 563 buildings totaling 111 million square feet in 41 states. In 2021 alone, STAG added 95 leases to its portfolio while maintaining an approximate retention rate of 72% since IPO. Investors have hope for STAG Industrial to see growth potential moving forward as it continues to show promising revenue. The momentum could continue in the next year, carrying with it stock prices. In the meantime, there's a 4.53% dividend yield to hold on to. And there it is, folks, the end of our list for today. We love to know what our community thinks, so don't forget to comment below with your favorite REITs. Is there a video you would like to see that we haven't created yet? Tell us in the comments. We want to hear from you. Check out the bio for some extra info, and don't forget to like, subscribe, and ring the bell to always be first to see our next video. Stock Dork out.